All right, so hello everyone. You're welcome back. It's Techriztm here, and I'll be your friend, your host, and your tutor. So today we're going to be talking about market structure 2, and under market structure 2, we'll be discussing profiles. We'll be discussing the market profiles. Let me quickly clear this mess. If I get you making noise again, I'll remove you, and you will not be able to join again. I'll remove you. Think I'll start muting everybody. I'll remove you and you will not be able to join again. Because tell me why you join a class and then when it's time for class, you're still making noise. Your mic is still on. You know yourself. You just muted your mic now. Why did you join and leave your mic on? Some of you like to cause issues. Some of you are doing this unintentional. And the day I'm going to get that person, I'll use him as an example. So we'll be talking about the remaining part aspects of the class. Adam, stop raising your hands. I wonder what you want to say. So, yesterday we talked about the three change of character. No single person was able to attempt it. That was disappointing anyways. But yes, let us anyways, my sister sent me a picture of the three of them, so I was like, okay, beautiful. Let us get right into it. I'll show you a picture of three, and then you can actually do your research on the others. Now, we said okay, this guy, this marvelous guy, where is he again?
Excuse me, sir. Sorry, your cursor.
Yeah.
Allô? Hein? Non.
All right, so we talked about three change of character modes, right? The first one is where we have a reduced momentum, right? Where if we have markets going in one certain direction, all of a sudden it just becomes very weak, right? All these interactions, you don't even need to think about it so much for real, right? You don't need to think about it so much. It happens literally in front of you. When you start noticing that, oh, the market could not really break as high as it broke before, it is a signal that the market strength is already weakening. Now, what's going to follow next is what? A change of character. And as usual, remember, we wait for a confirmation first because anything can happen. The reason why I tell you guys anything can happen is this. Sometimes the market can take this low and still continue upwards. Trust me, it happens, right? The market can take this low and still continue upwards. And we're going to learn all these things as we proceed down the class. We're going to realize that this is actually true. This is the reason why we actually want to wait for what? A confirmation in form of a second break, right? A confirmation in form of a second break, and then we sell. This is the first and the most common one, right? Now the next one is on the expansion. I told you guys the market will just rapidly expand and then continue downwards, right? This expansion, you're going to notice it via a very long candle. And then the last one is a failure swing. This one is also very, very popular. And all these things are not time frame specific. You can see it on the major trend, you can see it on the minor trend. Wherever you see it, it's not a problem at all. There is no specific trend like, oh, where is the specific time frame I'm going to be looking at for them? Nah, it doesn't work that way. If you can actually identify a trend, it's possible to see a change of character on that trend, right? The cheat code I normally give my private students is this: if you're unable to identify an order block on any time frame, that is the time frame you're supposed to be looking for any change of character or break or structure. If you can see clearly that, oh, this is another block, that time frame you saw the other block is the time frame you can actually see a change of character or a break or structure, right? So this one is also not very common, and I also don't recommend this one. When we get to range trading, you will discover why I do not recommend you trade this one. You know why? Because something like this can happen. And this is actually an edge I'm going to teach you guys. The markets can actually expand and return back again to the high. So this is range trading, where we have a very long range and then the market returns it back. So this is why I actually stopped teaching this one, but I just had to let you know that sometimes news can actually create the imbalance that pushes price to the downside. So, and the most popular one is the failure swing, the one that looks like this, where price fails to swing above a level, right? Because we know that in an uptrend, you are supposed to create new high. We are supposed to swing above old highs and create new highs. Swing above old highs, create new highs. Swing above old highs, create newer ones. This is a new high now. Swing above old highs. This is now an old high. Create a new one, just like that, right? But when the market fails to swing above an old high, something like this, and drops to break this low, this is also a very popular change of character. And they call this one what's shift of market structure. Many persons call it shift. Many persons call it SMS is what they call it. Many persons call it MSS. SMS, MSS, whatever it is, through shift of market structure. Failure swing, it's the same thing, right? Change of character. Most times this one doesn't really need a break of structure because this one is always very valid. Whenever I see a failure swing, it is always an indication that the market actually wants to change trend or change hands, right? And then boom, we drop. So let us see if we can actually identify these things on the charts, and then they can actually do practice for others. So there's one I'm actually seeing here. There's one I'm seeing here on the minor trend. So look at this high. We have this high. We have this low. We have this high. We have this low. Then we have this high here, right? Now this high now created this low. Can you see? This high created this low. And we are supposed to actually this low is supposed to create a new high. Is that correct? Well, it did not, right? It did not create a new low. And what did it do? It went up a little bit and boom, it dropped. I took this trade, sir. All these things that any place there's a change of character. Just now I took a trade there. And that was where it happened, right? The market actually broke below here. This is a failure swing. This high is the failure swing. This high failed to swing above this high. That's a break of structure. This was the confirmation it gave, and this was my entry. My entry was on this liquidity. You're going to understand why when we get to liquidity. My entry was literally on this line. I remember this trade like it was yesterday. This was where my entry was. Though there's an engulfing bar just next to it, though, but that was where my entry was, literally on that line, and I sold from there to the other high, to the other low rather. From here until this low, this was where I came out of the trade. So this was where I came out of the trade. It was like about 3 hours or so. This was where I came out of the trade. I think then when I was trading this, I didn't really used to trade 5 hour. If to say I was trading 5 hour like I used to now, my stop loss would not be that huge. It will be somewhere here. And it will be like 5 hour. But that's not the point of today's class. Now you can see that this break of structure also confirmed this change of character. And this is a failure swing. This is example number one. Right? Now let's look at another one. At the end of every trend, there is a change of character. You just need to pay attention to be able to spot it. Now look at one here. Look at one as here. So remember, at the end of every trend, a new trend will be formed. Right? At the end of every trend, a new trend will be formed. So it's something like this. This is what we're going to also discuss today, profiles. We can actually have the market go from uptrend to ranging markets. I love who asked that question in the group today. And then to uptrend again, and then to ranging markets, and then to uptrend. Sometimes it can also go from uptrend to ranging markets to reversal downtrend to ranging markets again to reversal uptrend. Like literally, a trend can actually And this was why I asked the question in the quiz that the end of a trend is the beginning of a range, and some persons were confused because a range too is also a trend. The end of a trend is also the beginning of a range. The end of an uptrend is the beginning of a downtrend. The end of a downtrend is the beginning of an uptrend, whatever, right? As long as it's a trend, it is the beginning of a new one. So this is also a mini downtrend. You can see that this is what I mean by huge structure. Now, this structure, when zoomed out, something like on the daily, I'm on the H4 now. When zoomed out, this is the high of the range. Who is this person calling me? Hello, mom. I'm in a class. Uh, so this is the high of this. If it's an uptrend, if it's as I say uptrend, if it's a high time frame, this is the high and this is the low. But you can see that on the H4 now, we can actually identify a trend inside of that move. Inside of that move, this is the next high on that higher time frame. But inside of it, you can identify so many trade opportunities. This is what I mean by major and minor structure. If the major structure says, okay, I am coming here, I have a POI I want to mitigate around here. Your job as a trader is to go to a minor time frame, a much lower time frame, to look for opportunities to take price to that area that we are interested in, right? To take price to that area we're interested in. When we've not gotten to that area, you start anticipating a shift. Trading no pass like this, so on any pair, you start anticipating a shift. No, you guys are seeing what influencers go through. Everybody is calling me, literally left, right, center. My phone never stops in a day. I have to just fling it away. So yes, literally. So that's what I was trying to explain. The lower time frame, or we can say the minor time frames, actually take price to where the major time frame wants, and then when you get to that place, it reverses back. And still, it is the job of the lower time frame to take it back to where it is headed to as well. So you can actually tell, oh, this is where price is going to, and all of that, but you're still not able to actually utilize the opportunity, right? Because you do not know how to enter these time frames. Because it is not about knowing that, oh, yes, I want to get to this place. Let's say the higher time frame tells you I want to get to this place. It's not about knowing he wants to get to this place. Questions you should be asking yourself is how can I actually involve me? How can I be able to, how will I be involved in the move that will take price to that high place? This is what we call, this is money you're making. These moves are the money you make, not by predicting that price gets to that place. So, but that's not our focus for today. As we go down the class, you're going to see how everything comes together, right? You're going to be able to identify how everything comes together. But let's focus on why we're here. So I saw a shift around here. That was why I decided to, because like I told you guys, at the beginning of every trend or at the end of every trend, a new one is formed. Just like here, this was where the higher time frame wanted to get to, and you can see when it ended there, there was a change of character, and we sold down. The same thing happened here again. This one is the this thing I was telling you guys about, the one that's caused by news, that the expansion one that I don't really recommend, but most times it works. So, but that's not what I was talking about though. Now, this is a point of interest. When we get to demand and supply, you understand better, but that's a point of interest. You may not know that because you're still yet beginners, right? So, but see what the market actually did. We had the low. We had this, sorry, we had this trend, high, low, high, low, high, forget about it. And then this is the last high, this is the last lower low. Now, this low actually created this high, right? This low created this high. Now, this high, if it were to be continuing the trend, is supposed to what? To drop below and form a new low. But did it? It did not, right? So what happened? It created a low that failed to swing this level, and what? We had a break of structure, or a change instead of delivery, right? A change instead of delivery. Now, this one actually was very graceful enough to give a confirmation, which was in form of a break. When you see this, just know that the trend has changed fully. There is nothing in Jupiter that will bring the price down. The trend has changed fully. And then price returned back gracefully again, took out this inducement, and then boom, we started pursuing higher prices. Right, so this one is a failure swing example. I'm going to show you one on the momentum exhaustion example. The same thing here again. It never ends. It never ends. The same thing here. Like I said, the this thing is very popular. The failure swing is very popular. High, low, high, low, high, low. Forget whatever that is. Then we had this low, we had this high, we had this low. So what the market did next. Okay, sorry, that's not correct. That's not correct because this high is supposed to create a low lower than this one, which is this one. The market created this high. This high is supposed to what? Swing below, right? But it did not swing below. And what happened? Boom, failure swing, right? This one, the market didn't give any confirmation. Like I said, failure swings most times don't give you a second chance. They don't give confirmations, right? But once we've learned mitigation and we've learned POI, you're going to be able to see how you can take advantage of the move, right? Because this was where I would have actually entered the trade because there was no POI here that was unmitigated. So this is where I would have entered the trade and I would have made money. So the failure swing is the most popular and the easiest, but others too also show themselves, right? Others too also show themselves. Now, this is another one. This is one here. Okay, so this one too is also like a failure swing. This is the low. This is the high. This is the next low. That's on the major trend. All these things I know they are trends, but I'm just marking out the major highs and lows, right? Then this is its high. Then this is its low. Then it's created this high. This high was supposed to pull back and create a new low, but it did not, right? It did not. What happened? Break of structure. Sorry, COCH. And what? Confirmation. And the market did what again? Came down to this unmitigated POI and bought. So it is mitigation that also determines where you buy from. That's why you don't just trade change of character blindly. Everything clicks together. It's not something that you just jump into, right? You need to be able to know what are POIs, what is mitigation, what is on mitigation, and all those things, right? That is what decides where you actually take your trade from. So because many persons who do not even know what mitigation is would take their trades from here, and the market will use them as an inducement into this POI, and then we move. So let us now look for the momentum exhaustion one. Let's look for the momentum exhaustion because majorly is always failure swing, failure swing. That's why I said they're the most popular. It's majorly failure swing you see at the end of every trend. See here again, failure swing. Here again, failure swing. Like literally, literally. This one was caused by an expansion. Can see what I mean by expansion. This one is very tricky because if you don't know how to trade them, you're going to lose your money from them. This is when an expansion causes a trend change, right? Is when news cause a trend change and expansion. The market just breaks above that high with just one single or two candles only, and boom, you start to look for entries in a very tricky manner. I would not advise this, but anyways, I'll teach you how you can get into trades like this and make money at this high. So, but entering at an expansion, I would not advise it, right? So this is why I said the expansion one, just don't bother yourself about it. But yes, it happens in the market. Sometimes expansions can actually what creates the trend change. All right, expansions can create the trend change. Now, this one is a momentum exhaustion. It even looks like a failure swing safe because the market had really lost all its volume around here. This one looks like a momentum exhaustion because this high could not break below this low properly. It just swept, right? Couldn't break below the low properly. It just swept. Swept liquidity. It's always like a sweep. Swept liquidity, and what happened next? we had was a break above this high, change of character, confirmation, and then anywhere from above here is safe to buy, right? The market didn't really come back to give chance to buy, but we would have actually gotten in somewhere here. I would have actually gotten in somewhere here. But anyways, that is that about that. I'm not teaching how to get into the trades yet until we get to POIs, right? Failure swing again. Failure swing is the most popular of them. Most popular of them. This one too looks like momentum exhaustion, but not quite. Not quite. Um, Failure swing again. Okay. Okay. I can see one here. This one looks like a momentum exhaustion, right? Because look, see, this is a break. See how the market move down. Break, 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 break. Yeah. And then all of a sudden, the break was no longer as it didn't push down as much again, right? This is a clear example of momentum exhaustion. It didn't push down as much again. It didn't push down as much again. And what happened next? The market went to break above this high. The first break is the COCH. Second break is the what's confirmation. Then the market retraced back into a POI around here. I think this one, everybody caught it. There was time on Twitter. This was what, 2023. Because I started trading Forex around this time. I remember this trade very clear. Remember this trade like it was yesterday. And boom, we bought from here and we started moving higher. So yes, the trends actually happen. The trend change actually happens. You just need to train your eyes to see them, right? You need to train your eyes to see them. Failure swing again. You need to train your eyes to see them. Failure swing again. The failure swing is the most popular one. So if you can actually master that one, you're going to actually have so many wins on especially currency pairs. If you can actually master just the failure swing, you're going to actually have your win rate is going to be a lot on currency pairs, especially. Right? This one also is like this one is the expansion one. Failure swing again. Failure swing again. So this one is a huge time frame though, because on the H4 time frame, it's no longer a failure swing. This one is a momentum exhaustion, and then the market broke. Change of character, break of structure, we are bearish, right? So, anyways, that is that about that. The rest of it, go to your GBP JPY or GBP USD charts, find the law of them. Let us move on to something else. So before we actually move on to market profiles, I want you to know that a shift or a break in price in any direction at all, as long as it's a break. You know what I mean by a break? When I talk about breaks, I mean weak to body break. So you guys don't make the mistake of ever thinking it is body to body. I'll show you situations where we consider body to body breaks, right? When we get into the more advanced trading, we are just trying to actually cement the basics so it is not difficult when we get to the difficult part of it, right? So the weak to body break, I mean, is this. If we actually say this is an old high that we want price to break, it simply means that I want price to break above the highest point. And the highest point in every candle or every range or whatever it is, the highest point is a wick, is always a wick, right? If you look at here, there's a very tiny wick around here. I want price to close above the wick, right? That is what a break is, right? That is what a break. I want price to close with a body, a full body close above the wick, right? Now, when price actually does something like this, there is always a POI left behind, or we call it key levels. On the high time frame, we call it key levels. There is always a POI left behind. Understand that when price actually breaks through a level, there is always a POI left behind. Now, it is now your duty as a trader to determine, is that POI tradable? What are the questions you begin to ask yourself, right? Is the POI tradable? Is it manipulative? Is it a soup? There are so many things to ask yourself. Don't worry. So many questions to ask yourself. Is it liquidity for another POI just below it? Because sometimes POIs themselves can be liquidity. The market can come and take them out and then continue upwards, right? So there are several questions you ask yourself, right? But just know that whenever we have a break, it creates a range, and that range contains what? A point of interest and a trap. A point of interest plus a trap. And if there's no trap, the market will engineer one just before the point of interest. The market will engineer one just before the point of interest, right? So that is that about that. Now let's get to market profiles. Now, these market profiles is one thing I want us to understand. It's going to be it's going to have so many like names, but I want you to calm down and just process it. You may not be using it now, though. It's just something you're going to use in the future when we start lower time frame trading. You may not use it now. It's something you're going to start using in the future when we start lower time frame trading. But I want you to memorize them as much as you can and get used to them because involuntarily we are going to actually mention them, right? Involuntarily, we're going to mention them, and we're going to begin to see reasons why some trends actually behave the way they behave, right? So we're going to start with because I drew a lot of them down. I'm also going to send you guys a picture of my book where I drew them down so that you can actually keep a copy to yourself as well. Show you a picture of my book where I drew them down. You can keep a copy to yourself. So, when we talk about market profiles, we want to talk about two things especially that happens in the market. Now, it's either when we talk about market profiles, there are two words we use: expansions and range. When we talk about market profiles, you talk about expansions and range. Now, when we say the market is ranging, we say the market is actually what's creating no highs and no lows. People call it accumulation. PO3 traders, power of three traders call it accumulation, right? And then when we talk about expansion, we mean the market is going up or going down. Expansion can be in two ways, up or down, whichever one. We just know when we talk about expansion, the market is actually going, is trending. The market is trending when we talk about expansion. But when we talk about range, it means the market is consolidating, right? So that these are the two words we actually use, expansion and range, right? During our trading, when it comes to lower time frame, we only want to take part in the expansions. We never want to trade a ranging market. Whenever you see a ranging market, just avoid it. We never want to trade a ranging market. Rule 101. You never want to engage in a ranging market. Always be involved in the expansion when price is ready to expand, right? When price is ready to expand. So now, in these whole profiles, we're going to talk about three things. Oh, sorry, so I said three things, four things. And these four things they are all profiles. They are all profiles. Now, the first one, we're going to be denoting them by keynotes. So we're going to talk about, let's say EP. EP means what? Expansion profile. Hmm? EP means what? Expansion profile. Talk about MP. MP means what? Manipulation profile. Manipulation profile. Then we talk about RTP. RTP means what? Retracement profile. Retracement profile. Then we talk about RVSP. RVSP. RVSP what simply means was reversal profile. And then we talk about RUP. RUP is what? Range profile. These are the five of them we're going to use. I'm going to go again. EP, expansion profile, MP, manipulation profile, RTP, retracement profile, retracement, RVSP, reversal profile. The PPP at the end is reversal. E, expansion, manipulation, RT, retracement, RSV, reversal, RP, what? Range profile, right? Range profile. Now, there is one constant in each of all these things, and the one constant is the presence of a key level, KL. There is one constant, right? When in mathematics or in physics, there is so when we say something is constant, it means that that thing is always there, right? So for all these things to actually work, there's a constant, and the constant is what? A key level. There must be a presence of a key level, right? There must be presence of a key level. Now we're going to actually I'm going to show you their progression so you understand what I mean. And their progression actually follows the standard schematics. It never changes, right? One follows the other follows the other. So you just write it down and keep memorizing it until it becomes part of you, right? Till it becomes part of you. So let's now talk about the manipulation profile. When you talk about manipulation, what comes to your mind, right? When we talk about manipulation, what comes to people's mind is, oh, the market stopped me out, right? The market stopped me out. Now, manipulation profile always, listen, always comes after a ranging profile. A manipulation profile always comes after a ranging profile, right? A manipulation profile always comes after a ranging profile. Now, a manipulation profile ends after a confirmation entry has been made. I'm going to draw it down. A manipulation profile ends after a ranging profile has been made. So if we have a manipulation like this, sorry, if this is a ranging profile, remember it comes only after a ranging profile. Remember, a manipulation profile would go in the opposite direction price is interested in heading to. That is one thing you should actually write down. Very important. A manipulation will happen in the opposite direction price is interested in heading to. So if we have a ranging profile, remember it also comes after only after a ranging profile. So if to say the market actually manipulates below this ranging profile, it simply tells us that the market is what's interested in what's expanding higher. And if the market actually what manipulates upwards, this tells us that the market is interested in expanding lower. It's as simple as that. A manipulation profile will only occur in the opposite direction of the expansion. So after a range comes a manipulation, and then comes what? An expansion. The manipulation will happen in the opposite direction of the expansion. It's as simple as that, right? Now, it will end, it will end with the formation of another block, what we call CSD, to end with the formation of another block. Here, we'll have something we call CSD. It will end with the formation of another block. So when you see a formation of a CSD or another block after a manipulation, just know that what a manipulation profile has ended and the market is ready to expand. This thing alone has just basically revealed a lower time frame strategy I use, just this thing alone. And even a higher time frame, whatever it is you call it, it has reviewed a lot. But it will not make sense now, but I'm coming somewhere, right? I'm coming somewhere. Now we have actually written down all the profiles. Let's now arrange them in the order they actually follow, right? So I'm going to have to get a very wide space. Okay, so now let's start with scenario A. Let's start with scenario A. So we have key levels, key levels, key levels. Let's do three first, right? Key levels, key levels, key levels. Okay, so now a key level, like I said, is the constant, right? A key level is the constant. A key level is the constant. A key level must be present, is the constant, right? A key level is a constant. Now, this is the scenario of a range profile, right? Two scenarios of a range profile. A range profile, after a range profile can come two things. After a range profile, we can actually move to a manipulation profile and then to expansion. Or a range profile can also move straight to an expansion. And I'm going to show you, I'm also going to show you on the charts because this one I actually use it very, very often. Very, very, very often on the JPYs, right? So now when we have a ranging profile close to a key level or we call accumulation, most of the time the market was remember this is ROP, right? This is ROP. The market will what manipulates into the key level, change in state of delivery, and expand. So here is what we call the MP. This is why I said the key level is the constant because the price has to what come into well, has to dig into a key level. Now, if you actually follow me on Twitter, you see I made a post to key time, right? I would have talked about key time, But this is not a class on key time. I just want to explain the structural part of it before we talk about key time. But this must happen at a key time too for it to be valid, right? It must happen at a key time for it to be valid. But that is that about that. Now, this is the manipulation profile, and then the expansion profile, as you know it, will come after, right? The result of both of them will come after. We can call this one scenario one, where the market ranges very close to a key level, manipulates into the key level, ends with a CISD, change the state of delivery, and then boom, expands. Now, the second scenario is that the range would be on the key level. The range would be inside the key level, right? And the market will just what? The market will not expand anymore. Sorry, the market will not manipulate anymore. The market will just expand straight up, right? So this one is just going to be what? ROP. This is just going to be what? ROP and what? EP. Just these two, ROP and EP. So these are the two scenarios that what can happen to a ranging profile, right? So these are two scenarios that can happen to the ranging profile. So the manipulation profile would test into an untested key level. Remember, an untested key level, an unmitigated key level. All these terms will become clear. Just draw it down first. And then it would expand. Or the ranging profile will already be inside the key level and then just expand straight up without needing to manipulate, right? Without needing to manipulate. So now that is out of the way. Let's now talk about the expansion profile plus key level, right? Now, let us draw down the two scenarios and expansion. I just talked about the range profile. This one now is on the expansion profile. This one is on the expansion profile, right? This one is on the expansion profile plus key level. Remember, our key level is what constant. Our key level is what constant. Okay? Okay. So, um, let's say we have price expand an expansion profile EP can actually move into two phases, right? Can move into in fact can move into a lot of phases. It can move into about let me see. Yes, it can move into three phases. So let me draw three key levels and explain them all together at once. Can do three things. Expansion profile can do three things. I think it is the most. So let's say price expands into a key level. Remember key level constants. Price expands into a key level. Price can actually what? Reverse from that key level without anything, no accumulation, nothing. Price can reverse from the key level, right? Price can reverse from the key level. Change the state of delivery. Boom. This is what? EP. This is
Hello, sir.
EP plus RVSP. Marvelous, what was it?
That wasn't me, sir. Please, can you
EP plus
take it a bit slow,
RVSP.
sir?
Who is that person? EP plus RVSP. So an expansion profile digs into a key level, it can reverse back from there. Remember, this is a reversal profile. Here is one scenario it can follow. Now, a second scenario it can follow is this. I'm going to show you my notes where I drew them, so just relax. The second scenario it can follow is this combination of a range profile into it, right? Combination of what? A range profile into it. Okay, this is where this is supposed to be. Okay, no. Combination of a range profile. Now let's say we actually range somewhere here, right? And the market what? Manipulates, expands, right? And before the expansion, we have what? After the expansion, we have a range, right? Then the market manipulates again into the key level and expands again. Now, this is the one that combines range. So we have ROP here. I think by now you'd already be flowing ROP here again, range profile here again, EP here, and what? This is also, this is reversal. Reversal happened here. RVSP, RVSP, and then this is what EP. Sorry, this is not supposed to be RVSP here. It's supposed to be EP2, right? This is where the reversal happened, inside of the key level. So this is where the RVSP is. This is where the RVSP is. So just write it down, sharp. Anything that moves when the price actually is going in one direction is EP, no matter what. So this is also another EP. So this is scenario one, this is scenario two. This one combines ranging profile into it. This one doesn't combine any ranging profile, just the market expands straight into a key level, reverses or creates a reversal from there, and then boom, it expands, right?
What about the MP for this scenario too?
This one doesn't have, this one has MP. You label it yourself. Now I say you label it yourself. I can't keep drawing this thing. This is the manipulation here. This one here is the manipulation as well. Manipulation plus reversal. Then this is the EP. So after a range comes a manipulation. Two things. A range can only produce two things, a manipulation or an expansion. So if a range is here and price actually what drops into an opposite direction of the expansion, just know there was a manipulation there before the expansion. So that is another one. Then this is also another one. Market can expand, and then there will be a retracement to a key level, and then the market expands again, and then the market reverses. So this one is going to have ROTP around here, ROVSP around here, and then EP here. All right. So these are the three scenarios you can follow. One that actually just involves the expansion, reversal, and expansion. One that involves price ranging before a key level and then reverses and expands. And that one that involves what? A retracement. This is a normal move. This is just normal break or structure continuation, you people know, with just extra words, nothing more. This move to the key level is the retracement profile. The expansion continues. And then when we get to a key level, the market will reverses and expands again. So this is a three scenario. I think the expansion profile has a lot more than every one of them. Then the final one is the reversal profile. The reversal profile, I've also just explained it with this one, but I'm going to redraw it again so that we can actually see. So this is the expansion profile, key level, range, expand, reverse, expand. All right? RVSP. These are like key level here. EP. RP. EP. This is scenario one. And then another scenario is we have all of them just involves the same thing, sha. Expand into key level, reverse, expand, retrace, and what? Expand.
So what of the MP for the first key level?
I didn't ask you to ask any question.
Please don't do this. We have a segment for questions and answers.
I don't know who that village boy is. I didn't ask you to ask any question. Just draw down what I'm drawing. So this is expand, reverse at this point, key level, expand again, retracement, expansion. So the reason why I'm actually drawing these scenarios, you can have like so many multiple combinations and so many scenarios. But at the end of the day, you need to understand the most important of them all is understanding what the manipulation and the reversal profile and the retrace and the range profile, right? A range can actually manipulate first before what's expanding, and a range can also move from what a range to an expansion. So, like I said, this is the most important. Range, manipulate in the opposite direction and expand, or range and just bust straight out. right? And just bust straight out. Every other thing is just basically the same. Expansion, when we get into a key level, we reverse immediately. Now, these are types of trades where price just gets into a key level, tap, and then just start moving. Many persons call it sniper. Price gets into a key level, taps on a key level, and just start moving. This is the expansion, reversal, expansion profile, right? And then any other thing above there is just your normal trend. This retracement profile is just your normal break of structure. And that retracement profile will come again and it will expand back again. This retracement is just your break of structure. It will keep happening. It will keep happening over and over and over until there's a trend change, right? Until there's a trend change. So the reason why we need to get used to all these names is that one can happen at any given time and you need to know how to react, right? You need to know how to react based on these scenarios. So the range profile amongst all is the most important. Understand how the range profile operates. Every other one is not difficult. If you understand how the range profile and the manipulation works, every other thing becomes easy because this one is just basic finding your key level. The market drops into it, gives you a chain state of delivery and moves up, right? A chain state of delivery here is a confirmation and the market moves up. So these ones are not difficult at all, right? So because they are not actually the problem, I'm going to show you what a range profile and the manipulation looks like on a higher time frame, and I'll show you what it looks like too on a lower time frame as well. So this is a trade I caught far back on USD JPY. Still have a running position over there. That's not okay. So this is it. This is a key level, a higher time frame fair value. The market did what? Ranged for days inside here. And what happened next? In fact, this is supposed to be a signal. This is like free trade. It ranged for days inside here and then what? Dropped, manipulated. Remember, it manipulates in the opposite direction of price. So if the market had manipulated upwards, it means that we're going to actually have a sell. But it always manipulates in the opposite direction the market wants to get. So this move is just to clear out every early buyer, every person who actually starts buying from here. It clears them out, gives a chain instead of delivery as in form of another block or a point of interest, anyone at all, and then it breaks above. When it breaks out, the market comes down back, gives entry and go up. This is your classic AMD pattern. Range, expansion, range, manipulation, no expansion, confirmation, a confirmed break outside, retracement, expansion. This particular thing would keep happening over and over and over and would never change. This thing you're seeing here. It will happen on almost every pair and it will never change the schematics. It's going to accumulate for a while, manipulate in the opposite direction, give a confirmed break. This confirmation. Although I started buying this thing from here. I started buying from this place. So don't think I would wait for the market to actually get to. I don't usually wait for the market. When I see some checklist I used to trade, I just get in. So I didn't wait for the confirmed break. I took my trade from here and I made money. And then when the market broke above here, I knew the market was going to come down to enter this what? POI. I closed my trade around here, anticipated it to come into here, and I bought again. So, but I made money from here. Now I'm going to show you what it looks like on a lower time frame because this manipulation will always create an entry on a lower time frame. That CISD is what actually confirms that the this thing has ended. The CISD is what confirms that the manipulation has ended. The CISD confirms the manipulation has ended. And voila, this is it on the M15. This is on the M15. That is the CISD on the M15. Now, it didn't really give any opportunity to enter. Those of you who actually know USDJPY, this was the day they released one news. Forgotten what happened that day, but it didn't give any, it did not give newbies an opportunity to enter. But this was where I got in on the trade. So where I got in on the trade. I also got another entry too again from around here for the market broke. All these things you still learn it to do. It's not magic. It's not magic. And that is just it. So the end of every expansion or every manipulation, you're going to see what's a CSD. A CSD is simply, I'm just briefing now, it's not as if it's the class for it, is when price actually digs into a key level, and then the market what recovers back the key level and closes above it. Exactly. Dug into the key level at a key time too, dug into a key level, and the market was closed above again. This is a classic CISD. There's a classic C what's ISD. So that is that. Then look at it on GBP/JPY as well. In current price action. In current price action. The market is so this is a classic example of how a range can move into an expansion straight up. Hope you are seeing it. A classic example of how a range can move into an expansion straight up without having to actually manipulate. And the reason is because it was inside of a key level. Was inside of a key level, which is the fair value. Was inside of a key level. When it's inside of a key level, it does not need to manipulate. It just expands straight. Now, this is the confirmed break. It has broken out of the range. That is a confirmed break. If I'm going to look for entries on the pair, I'll wait for it to retrace back into any of these levels and I'll buy back again to Valhalla. So this is key level, range profile, and what's expansion. Why the one we saw on USDJPY is range profile, sweeps into key level, manipulates into key level rather, and then boom, expands. So, and then let's look at the lower time frame ones. The lower time frame ones may be a bit tough for beginners to catch, but then hopefully you get it. And with this lower time frame one, that's where I'll end the class. I will move into demand and supply. Okay. So first and foremost, I have to draw the key level because the key level is the constant, remember, right? I have to draw the key level first. Now, this is my key level. This is a bearish engulfing. I like to use this type of order blocks. Bearish engulfing. That was my key level. And can see what the market did. Inside of the key level, there was a little range. This is a fake move because this is a fake move because this move didn't happen at a key time. This is why I said key time is also very important for those of you who are interested in lower time frame. Then the original move or the actual manipulation happened at a key time, 8 o'clock. And boom, the market will change state of delivery and we dumped. That is how it looks. All right. That is how it looks on the lower time frame. Although lower time frame one, you need to actually combine a lot of things to it, like key time, CISD, and all of that. It's not as clean as the lower time frame one. Now, but look at this one too. Look at this one too as well. This one too as well. We had this ranging profile, right? We had this ranging profile. we had this key level here. And what price manipulated the first time was not a signal to me because this is not a key time. It's still 6 o'clock early morning now. And then what happened later on, we saw price dig into that key level at a key time, 8 o'clock around here. And then the market was dropped. And we had a CISD. And this was where I got into the trade. So this one would happen over and over. Those who would be interested in lower time frame, we are going to actually trade it together. And we're going to see it happen over and over and over. Range or accumulation, manipulation in the opposite direction, expand in the other way or in the other direction. So the only thing that is different you just add to it is waiting for price to manipulate in a key time or at a key time into a key level. And that's really all you need. And that's really infinite money glitch. Infinite money glitch. So, that said, I have come to the end of this particular class. That will wrap it up on market structure. Every other thing we're going to be doing on market structure would have to come from feature analysis. If we encounter anything difficult or anything that looks confusing, we would give opportunity for what we'll give opportunities to what go back and then re-explain some things, right? Because it doesn't all end in market structure. Market structure is just 60% to 70% of the issue, right? You still need to know how to select your POIs. You still need to know when to enter a trade. You still need to learn trade confirmations, demand and supply, efficient price action, and some other little things too. Range trading, right? So that is the end of the market structure class. I would probably have a next call. Or no. Let me not stress you people. That'll be the end of the range class. The next class will look at demand and supply. So let us answer questions now. Let me first end this recording.